in the Hangouts as Vikas, but we lovingly call him Vinay. Alright, so these are the new participants who have joined, and we have all of our existing participants, and others are joining. Sri says, hi all, welcome to the NPA trading family. Brilliant, thank you, Sri. Nice to have this message from our uh, existing members to the new members. Good gesture, absolutely brilliant. So we'll start. Sorry for the delay, because we have to invite all the new 3 and Google Hangouts has to handshake and welcome them, and then we get started. So we'll start with general financial product advice. Warning: NP Financials Pty Limited, NP Financials or NPF, advises all service recipients of the following. This information is provided only on general financial product advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. No information received from NP Financial shall be considered as a financial trading recommendation. I'll allow another 20 seconds for you to go through it, please. Once you're done, please let me know. Either you can let me know through your Hangouts or messages like here, and Lisa says yes, and Sri says hi all, welcome. You can write your messages here on the Google Hangouts, or just unmute yourself when you are not talking. Unmute yourself and then talk, and then again mute the Google Hangouts here. This is the mute unmute button in front of you. Where is that mute? Yeah, just on the at the center, bottom center. Sri says, can we start with my questions from second email, please? All right, we'll have all your this for the newcomers who are having the first monthly class with us. This monthly class duration would be for almost 2 hours, unless and until you are getting exhausted from your questions, or I am getting exhausted with my replies, which has never happened in last 4 years. So today will not be an exception. And please type in your messages or send me in our support at npfinancials.com.au, and then we'll answer all your questions. Yeah. So once I've gone through it, and then what we'll do, we will answer questions. I'll take the first question first, which has arrived at the inbox of NP Finance support at npfinancials.com. And then the first question was from Singh Shong, and his question was, hi, good afternoon Selvan, how are you? Selvan, just to inform you, we have 3 new members joined today: Molalo, Sin Song Fan, and Vikas Kapoor. We call Vikas as Vinay. He is better known as Vinay. So these are the 3 new participants in our group, and I'll start answering the questions which we have got. And this is the first questions which we have got. Could I get some advice on how to create this split chart? Partha did this during the coaching session, but I missed how he split the price into the bottom half of the chart and how have the zigzag indicator separate at the top. So how to do it? It is simple. We'll take a screen like this. For example, we are taking anything like in front of us is high grade copper. What about our friend so where is Sukhdeep? I'll just give him a quick call and then see where is he. Has forgotten or what? He had so many questions, so give me 30 seconds. I'll just call him. Yes, Sri, that is being done. Thank you for reminding.
Good afternoon, Mr. Banerjee.
Yes, Sukhdeep is attending the class.
It's going to start 3:30, is it?
No, 3 o'clock.
Oh, really? I was
Yeah.
thinking 3:30.
No, you can join now. We are just starting.
Okay, no worries. I'll let him know.
Thanks a ton.
Yep. Thank you so
Thanks.
much.
Bye. Molalo Falafi has said hi everyone. So that's great from Molalo, and Sri said welcome to the NPF trading family. That's good. I'm taking the first question, and Sukhdeep is Shelvan has joined us. Sukhdeep is just joining us. So I'm taking the first question, how to split the chart. So what you have to do here, first for example, if we are high grade copper or apple or anything, so what you have to do, you have to click on this plus add indicator. This is for add indicator. Click on this, and when you click on this, it will ask you for a new indicator. You can scroll through. In your case it will be 102, because I have written more than 1500 indicators, that's why it is 1602. For you it will be maybe 82 or something like that. So just scroll through and then go to price. For example, like this one, price. So you have to scroll through and then write, or you can type in here price. Any which way it will show you. So you can type in price, or you can just go through and scroll and then go to price here. So where is price gone? Yeah, both, I think both cannot be done. Either you scroll through, or you type in. So whichever way, I'll just type in maybe price and then go down to find. I think I completely lost. Right. I think hi Sukhdeep, how are you? Sukhdeep has joined. Good afternoon, Sukhdeep. We are just starting, so you have not missed anything. I'm just answering the first question. I have not answered yet. And Sukhdeep, just to inform you, we have three new traders in our family. We have Molalo Falafi and Sinsong Fan, and we have Vinay Kapoor or Vikas Kapoor, the same person, with a nickname as different. And Sukhdeep is nickname is Sam. So we would call Sukhdeep as Sukhdeep, not Sam, and Molalo as Molalo, not Mo. And Vikas as Vinay. Okay, the first question I'm taking, everyone, is to how to split this chart. So for splitting this chart, you have to click on this add indicator at the top, and you just scroll down to get price. So let it come. You can just scroll down to go to P, P for price, PRI, this is the one, and then add. Click on add. So it will add price. So for example, if you are looking for candlestick, you can do candlesticks, or if you are looking for bar charts, you can make it bar charts, for example. Now that you have added it, you have splitted the chart. This is the simple way to split the chart. And you can change these to, for example, if you are changing these to bar chart, you can do that. You can click and you can click on the bar, and so on and so forth. And any of these chart, if you are adding indicators, what you have to do, for example, if you want to add indicator here, for example, if you are we are in Apple, for example, and we have splitted the chart, and we want to add indicator, for example, zigzag. That was the question there. So what we'll do, we'll go to our preferred time frame, which is for example 2 day. We'll delete this, and then what we'll do, supposing we want to know the wave pattern or wave structure of the market. To understand the wave structure of the market, the best way to know is through zigzag. You can do through our own impulsive and corrective, but if you want to automate it, what you have to do, you have to right click here right click here and then go to again, don't go there, don't go here. The difference between adding this one, this will split the chart. The more number of times you click, like for example I'm clicking but for the third time, and for example I want pivots, and then it will again split the chart. Yeah, it will split the chart, it will split the chart and it will add the pivot. So the difference between this and that, this fellow will split the chart as many numbers as you click. For example, if you have by mistake if you have clicked this icon, it has splitted into 3. This is the icon at the bottom right hand corner, the fourth icon. You have to click on that, and then you say if it is never for you, you have to change it to maybe cursor on chart or always cursor on chart. Let this change it to cursor on chart, and then you have to delete. You have to click this one cross button, and if you click on that, it will go. Yeah. So and then again, if you are not interested to have this, you can go back here and then go and then do never. And now you want to see the wave structure. What you have to do, you have to go to, don't do this, right click here and then go to settings price, not the chart settings price. If you go to settings price and then type in again, you can scroll down or you can type in whatever type in. For example, if you want to use 2.618 as the square of the golden ratio, or you can use 3.33 as the impulsive and corrective, so from you can see from 23rd of March, after the COVID attack from 10th or 14th of April, 14th of February. So from 14th of February, when price came down 35%, and then price recovered it. We have the rules. Those of you who are already with us for more than 1, 2, 3 years knows all of our new rules, like it can break 1, cannot break 2. Those of you who have just joined, like Molalo and Sukhdeep and Vinay, has to continue to listen to us so that you know exactly what we are talking about when we say it can break 1, cannot break 2, and close above high taken out, close below low taken out. So for example, after the COVID, after when the corrections happened from this fellow 23rd of March, we can see that the blue if you want to take this out, price for example, you can make it invisible. Supposing I am making it invisible, you can do that, and the zigzag with 3%, you can do this. So you can from here, from this date you can see, configure vertical line, display date, and you can write in here after COVID-19, you can type in and you can set this. So and you can also, if this is fouling, if this is interfering with your price, what you can do, write justify. If you write justify, it will not interfere with your indicator. If you take this out, it will look like this. If you take this out, it will look like that. So there are simple functionalities. Those of you who are new to the charting software, this demonstration will help. And it is saying after COVID, as you can see, after COVID-19 here, and also date 23rd of March. And those of you who are practicing the head and shoulder, for example, this is the head, this is the shoulder, and so this is the right shoulder, and this is the left shoulder, and this is the head and the neckline. So if I join if I join this is the head, my dear friend. So this is the head. I'll just type in H, and then I just type in right shoulder here, and I can just type in the left shoulder. You can take this one as this one. I would take this one, or you can take this one. For example, let us take this one, left shoulder. The preference is the one which is actually lower. Preference is one which is lower. So this is not correct. So this is correct. Between this swing low and this swing low, in the zigzag itself. This is lower, so we'll take this one, not this one. So if I bring the price just to show you the swing lows, so splitting is done, so I'll maximize. I can maximize that, and you can reduce the price, it will come. So these are the small functionalities which took me months and years to master this but I'm sharing with you so that you can leapfrog your experience with the charting software. So I'm maximizing price, so maximizing, and then I'm bringing the price. So go to settings price, because I have hidden that, and bringing it back. So bar chart, I'm bringing it back. So if this is also a swing low, and that is also a swing low. Between this swing low and this swing low, I'm taking this one because this is lower than this. Okay, so because that is lower than that. So just to continue on that, I'll do settings price and then take this out, make it invisible, because we are doing the head and shoulder pattern. So now what I'll do, this is the head and the left shoulder, and this is the swing high, and this is the right shoulder and the head, the swing high, and I will join this to this, and I'll make it visible so that you can see. I use a black line, black background, that's why every other things are different colors. Yeah, so this is the neckline in front of us. This is the neckline, and this is most importantly on a head and shoulder, those of you who are practicing, this line head to right hand side must not be broken, must not be broken, must not be broken. Broken means we have our definition at N P Financials: close below low taken out and close above high taken out. But this line must not be broken. So till what point it should not be broken? Till it is achieving the target. So let's see the target now. I'll delete this one. So to find the target, we will utilize this segment. We'll utilize this from the head to the neckline, from the head to the neckline. We'll drop a vertical line, and that will be our target. So this is our target. So copy that line, copy this line, and paste it after it broke. So now this is the target from this head and shoulder COVID recovery. So this is the first target, and then after price break this first target, then this is the second target, and after that you can continue third target, and after that you can continue after the corrective. So this is impulsive corrective, so I'll write it down, and this is the fifth target which price achieved. So in this, what you have to do, you can type in here that this is target 1, and then copy that target 1 from here to place it here. Target 1 is achieved, and then this is the target 2 at this level. What you can do, you change this to target 2, and target 2 display, okay, target 2, and then copy this to make it target 3. So those of you who are trading heavily stock markets, because that is the one which is absolutely brilliant as far as trending market is concerned. One asset class which is trending very heavily is the stock market. So target 4, Apple has reached target 4 so far, and then we have the last target as target 5. We'll copy this and bring it here, and change this to configure text. Right click, configure text, target 5. This tool is for configure, this is for move, and this is for copy. So this is for copy, move, and configure. So now let's those of you who are new, I'll just the big ones, the big lines like this one is the impulsive. So please write down, for example, impulsive wave, impulsive, just write down impulsive, and this software is a beautiful one, and then you do this to make it parallel. So this is impulsive 25 degree. You'll come to know the degree of the movement. So this is impulsive, then you copy that impulsive to this one, write it impulsive, and this is impulsive, and this is impulsive, and this is impulsive, and then right click, and then if you are very fussy about the correctness of what you are doing, as me, so you can change this to a match to become parallel. So make it parallel and make this one as parallel, and so on and so forth. So you can do this way the parallels. It is important to understand the difference between impulsive and corrective, which I will show you in a minute. So these are the impulsive, 1 2 3 4 5 impulsive, uptrend, impulsive uptrend, and the other ones which are having are the corrective ones, the other one which is the corrective. So now the question would be, which is a corrective and which is an impulsive, and how do I know it? That is a simple answer, and we have found the answer as in, so let me first type in the red color as corrective, this as corrective, this is corrective, and this is corrective. So how do I know which is impulsive, which is corrective? Just measure the length, either visually. If you are a visual person, you can make it visual, and you can see the length of the impulsive moves are greater than the corrective moves, isn't it? Yes or no? Who disagrees that, please?
In uptrend, impulsive is longer.
Yeah.
Corrective is longer.
That's it. Yeah. So whatever I have done is correct. All right. Then if I bring this price back into ratio, bring it to candlesticks or bar chart, whatever you prefer, as you can see, the targets were here. If this is the scale, you click on this scale, and our target from here to here was 15%, 884. And then after the break we got 962, and again we got from here 962, and again we got from here 962, and again I'm just calculating the top 962. So this is 962 and this is 962. So roughly we got 1 2 3 4 5 6 7 7,000 pips roughly we got from one instrument, which is Apple, after the COVID. So this is how you can split the chart, and in addition to your splitting the chart, I have answered what is impulsive, what is corrective, how to measure the head and shoulder in front of us, and so on and so forth. So have I answered your question, Sinsong? Lisa's answer was yes to the previous question. Sinsong says yes. Very good, fantastic, brilliant. Any question here before I go to the next one? How many of you have taken this? How many impulsive wave have? Sorry for that. Have participated in the impulsive waves through our own strategy system. For example, if I go to file and then load share trading, this will load N P Financials share trading. Yeah, so from Apple we got the sample setups, as you can see. So these are the sample setups. So these are starting from 25th of March. This was the first, this was the second, this was the third, and this was the fourth, and so on and so forth, fifth and sixth and seventh and 8 and 9 and 10 and 11 and 12 and 13. Yep. These are the sample setups for Apple after COVID, and in impulsive and corrective moves. Those of you who have already completed share trading with us possibly have taken the advantage of the massive price action or trending market which is happening in front of us, like Apple. From 2016 we are trading only 8, people actually ask how can you only trade 8 of them when there are 800,000 of shares to be traded. But from 2013 and 16, from 2013 again, from 2016 again, from now 2020, we have not changed this. We have incorporated Tesla way back in 2013. You can see the progress of Apple here. Similarly, if I go to the second one, which is Amazon, you can see the trending nature of Amazon here. You can see that. You can and you can see the other one, which is Facebook. You can see the trending nature of the Facebook and Google, and last but not the least, Tesla. You have an amazing run here. Yeah, you have an amazing run, and these setups and the setups in front of you. All right. So, any question here, or should I go to the second question? And you can actually find these setups here in our share trading. You can see this have got changed to renamed as commodity trading, forex trading, share trading. You can click here share trading, or you can click here the share trading. Supposing you are clicking here on the share trading to know the sample setups, when was the sample setups for which Goldman Sachs, Tesla, and so on and so forth. You can Alphabet, you can load more and see more months. Supposing Alphabet, that was the setup and went up to this point, and so on and so forth. Here you can load more and you can see more and more of this on our share trading platform, or you can do the commodity and so on and so forth. So, any questions? The questions here? Everyone is okay with this? All right. So, I'll go to the next one. Next question from Sri. His question is, let me bring his question. Could you please detail the calculation for entry and stop prices for live cattle and orange juice? Okay, which time frame have you referenced? Okay, so live cattle. Very good. All right, so we'll go to our strategy model with commodity. We spent some time, good time, last 30 minutes on share trading. Now we are going to commodity to answer the questions on commodity today. Sukhdeep, you did not ask a question on the share trading. Alright, because Sukhdeep is trading very heavily shares. Okay, so we'll maximize this one. Alright, before I answer this question, again and again I answer only one question repetitively. That is this we have, if you go to N P Financials, for example, and the website will come in front of us. And if you go to maximize this and then go to client arena, our old students know all of this inside out, but we have a facility for international students, for everyone, for any country. The simple thing, client arena, for a membership of $100, which most of the students give after they are done with their timing of maybe 6 months, 9 months, or 12 months, or 1 year, 2 years, 3 years, 4 years. So the trade idea basically are for everyone, including all of you, and people who are only using our client arena, to get the trade idea. So people who are buying this client arena and getting trade ideas, they do not know, or they need not know our strategies inside out. They are only interested in trade ideas. They are only interested in trade ideas because they have seen through our trade idea section how many winning trades they have got and how many losing trades. Lisa, thank you for being patient for us with we are implementing these suggestions. You have seen we have renamed this, and you have seen we have renamed other stuffs here as well, like the instruction based discussion, like cryptocurrency. We have renamed this cryptocurrency, and so on and so forth. We are also trying to do this, not trying to, but we will do this, but it takes time. Coding takes time, that's why it is taking so much time. We'll change this and we'll implement what Lisa has suggested 2 months back in one of our monthly class. Correct. So coming back to the question, all the trade ideas which you can see from last so many years, you can go to our trade idea section, and then you can go to our trade idea, and yeah, so you can go to it goes up to 2016, 4 years, and you can see if you calculate, if you can take a calculator and do from December 2016 till date, we have been giving this, sharing this trade idea for last 45 months, and in the 45 months anyone multiplied by 100 for the client arena has given us 4,500, and we have, in return to this, we have given them back 31,586 pips against $4,500. So if anyone investing $1 a pip, so he is getting back 31,586. And out of the 45 months, as you can see, 5 months were negative, like minus 48, minus 302, but at the positive side 2,375, 9,837, and minus 240, and so on and so forth, minus 66 versus plus 862, plus 664, so on and so forth. So this is the trade idea section which we share with all of our client members, client arena members. So the trade ideas which we share is not from the strategy section, is not from this strategy sections, because most of the client arena people who bought client arena, they don't know our strategy. You know our strategy because you have gone through our commodity trading, you have gone through our share trading, you have gone through our trader foundation 6 months, 9 months, and 12 months. You have gone through, and some of you who are new are going through this. Yeah, some of you are new are going through this. So we will not repeat that. We will not repeat what is already there in the strategy section. Supposing for a high grade copper, like this was a sample setup on this date, like this was a sample setup on 1st of June. We will not repeat this in trade idea because you know this is a sample setup, so repeating this does not make any sense to us. Or like this one here, 14th of August, just copying this number and pasting it in our trade idea section does not make any sense, because it is, the trade idea is in addition to the strategy opportunities which are coming, generating through the strategies. Trade ideas are in addition, are a complement or a supplement, not exactly the strategy. So that is number one. And to answer your question on the live cattle, so let's go to live cattle. Okay, delete this, okay, delete this. Yeah. So live cattle, what we have done is we have given a call recently. Those of you like Vinay, Maulalo, and Sinsong are very new to our systems. Of course Vinay is, but he had some break, and then again he has rejoined. So for the live cattle orange juice, my dear friend, live cattle orange juice are commodities, and we have our preferred broker as Go markets. We have our preferred brokers as Go markets for various reasons which are already discussed with all of you. Go markets with our request or with our communication, what they have done, or suggestions, what they have done. They have implemented shares, ASX and NYSE, and they have implemented some of the commodities like gold, silver, oil, not all. So if you are not getting orange juice AUD in MT4 in your MT4, I would please request you to drop us an email in Gmail in our support at npfinancials.com.au, so that we will introduce to another broker and to trade this live cattle and orange juice. Till that time, Go market is introducing. We are pressurizing them, but then want to have the volume. Okay. So live cattle we gave on 3/9/23rd of September, 10,513 long. L means long, S means short. Yeah, L means this is a mistake. This is L. This is small L. It should be capital L actually. So short, S means short, L means long. 10,513 with a stop loss of 9,939. So remember those two number 5139. So you know our preferred time is 2 days, and in a 2-day chart, if you have this impulsive corrective in your brain, you will see that after this sample setup here, after this sample setup there, we have a point here in which if you see starting from 6th of April on this impulsive corrective structure, you can see that impulsive corrective, impulsive corrective, impulsive corrective. So if you see this, this is till this point, this corrective length is less than the impulsive, this corrective less than the impulsive, this corrective less than the impulsive. Is it clear to all of you, including Vinay, Molalo and Sin Song, the impulsive and corrective, my dear friend? Please do not suffer in silence. Please say yes, no, participate. The more you participate, the better it is for all of us. Yeah. You can either say unmuting yourself and say yes, or you can type in yes. Sin Song says yes, Lisa says yes, Sri says yes. What about Molalo and Vinay? Vinay, you can talk or you can just type in. Is impulsive and corrective okay, and from understanding point of view? Yeah. If you do not write anything, or if you are Molalo is asking commodity 2-day time frame. Yes, we will be doing commodity in 2 days time frame. Yeah. Yeah, so everyone is correct. So so everyone is seeing this. Millions of traders are seeing this, and you can break this. You can break this to this. You can break this to big impulsive, to small impulsive like this one, and then small corrective, and so on and so forth. Small impulsive, small corrective, and so on and so forth. You can do that also. You can do that, yeah, if you want to break it down. So what we saw in the live cattle, every one of us saw that this is a possible end of a corrective. How do I know where is the end of it? So the best thing is to know is to draw this channel like this one is this channel for uptrend, this channel for downtrend. If you draw this channel, it will tell you that this is a possible. Or else what you can do, if you are not very conversant, what you can do, you can measure the length of the previous corrective. You can measure the length of the previous corrective to know the correct end, the current corrective end of the corrective movement. Yeah. So what is the current corrective movement from here to here? So what is the length of that? Click on the scale and go to the swing high in a 2-day chart. Swing high and come to the swing low. It will tell us, go to the percentage, it is better always. Go to the percentage and it will tell us 6.3% is the correction as of now. And again go to the previous correction like this fellow and see what is the correction. 7.64 was the correction. Yeah. Again you go from here to the again you go from here, from the swing high to the swing low, the correction was 12%. So 12%, 7%, and 2%, and then 6%. So if these figures are matching, they will never be exact, because market is not perfect all the time. So if they are matching like this 6%, like this 7%, then there is a possibility that this is a possible end of a corrective. The other possible way to know is through those of you who have completed our 9 months or 6 months course. No, we use a tool called Fibonacci, and when we were here, not even here, when we were here, this is a swing low, and this was the previous swing low. So from swing low to swing high, you join through a Fibonacci, and take the one which is, make it invisible, which are not actually doing anything. So take this out 50%, and take this out 61.8%, and keep this 78%, and make it a different color. Yeah, 78%, and at the level of 10,371. So what is this telling us? It is telling us that when we have drawn the oblique line, when we have drawn the Fibonacci, from here to here, it got stuck at the 78.6. What does it mean? It means it got buy order. At this point to go long. So seeing this, we have placed the order at around 10,000.
513.
Thank you. 10,513. So you can bring it to daily chart if you want to see where was the high of this hammer. 569, and this is the 554. So five 513 is calculated from one time frames high. When these columns are changed, into time frame and stuff like that, which Lisa has suggested, then you'll come to know whether it is given in 4 hour or 12 hour or 2 days or daily or weekly. But till that time, we will have to find out where it. Okay, I think I remember. It came from the whole number of 10,500. It came from the whole number of 10,500, and adding some pips to the spread. If the spread is 26, what is the spread of live cattle? Who remember? It is in our modules, and anyone remembers the spread of live cattle, or should I go to my module and Sri, you asked this question. What is this? What is the spread of live cattle? I think 26. I think so. Okay. So if I'll find it out and show you. So if the live cattle spread is 26, then we divide it by 2 to get 13, and add it to the whole number 11,500 to get this 11,513. So that is how. So that was done, and the stop loss. So let's see. Module 2, module 3. I'm just searching what is the, but you can search it out and then let me know the spread for live cattle. I think it is 26. Okay, I'm not getting it, but yeah. So if it is 26, then what we'll do, we'll divide it by it, and then we can see this bottom formation. We can see this bottom formation because this is a kind of hammer, not a good one, and then engulfing, and this is piercing, and this is a very good hammer in a 4 hour sorry, this is very good engulfing in a 4 hour chart. So that is how it is given. And if you go back to our, I think it was on the whole number of 10,500 being a being a support number, and then the stop loss for it was 9939, which corresponds to this point. 9939 is the low of this 9939. 9939 is the corresponds to the so 1 2 3. Generally it can, we say it can break 1, it cannot break 2. So if it is breaking this swing low, it should not break this swing low. So that's why the stop loss was safe at this point. So the if live cattle from our 513 level is going up to this point, that we get 5.16% with a stop loss of 5.26% which is 1:1. So that was the for live cattle. And orange juice, so let's go to orange juice. Orange juice, we gave a, it was doing up and down, so we had two channels. So if we take this out, orange juice had a previous whose mic is on, can anyone mute the mic? I think 14 pips come. Lisa says 14 pips. Great, thank you for that. Lisa says 14 pips, 14 pips for live cattle. Thank you, Lisa. And then we had the 13 points, 13 pips from there. Thank you, Lisa, for that. And live cattle, we see if someone can mute the mic where I am having the outside wind or fan. Is it Vinay? Vinay, can you mute your mic if you are not speaking? That will be, yeah, thank you for that. Brilliant. Okay, so live orange juice, we gave a trade call on orange juice only day before, only Friday, last Friday, to go long on 11,967. So 11,967, will mark that. 11,967. We'll do that. 11,967. So this is our entry point for going long, 11,967, and our stop loss was 11,290. 11,290. 11,290. This is our stop loss, and we can do right justify to see this here. 11,290. 11,290 was the stop loss. And remember, this fellow has corrected 13.143. 13.43% has been corrected. In previous days, if you have read books like Maggie and Edward Maggie, I think, and Edward is considered, and that book is considered as the Bible of technical analysis. If you have read that 600 pages book, it says if anything is falling beyond 3 to 5%, then it is a start of a new trend. It was possibly happening at around 1930s, but at 2020, as you can see, prices has fallen 13% and rebounds again 26%. So for example, this fellow has fallen 14%, which matches with this 13%. This corrective action was for 11%. So huge corrective actions, because commodities moves in a very humongous way. So it moved in an impulsive from here to here, 31%, corrected 50%, which is 15%. Again after correction, it from this hammer and from this piercing, Molalo, you are doing this exercise, I know. So hammer and piercing, it went back 27%. After 14% correction, it went back in a impulsive 27%. It came down 11%, and then it went 11.54. see how 11.54 is more than 11.07, because the impulsive has to be more than the corrective. Now the corrective is more, so it is a danger whether this 13.43, because it has taken out the 11.54, is possibly bringing it to a change in direction to the downside. But at the same, what we have taken, we have considered from here to here a possible stop loss of, it can break 1, cannot break 2 on the principle. So we have taken a 5% risk. If it goes up to this point, we get a 8%. So is it clear, Sri, both of it, the entry, stop loss and the target?
Yeah, it is clear, sir. Sir, if you don't mind,
Hmm.
could you please repeat
Hmm.
or redraw the channel which you have drawn to?
I hope everyone have heard what Sri question is. If there is a problem with your speaker, I'll just repeat. Sri is requesting us to redraw the channel. This is the channel, so I'll delete everything. Yeah, and this is in front of us. So these are end of corrective actions, so you can do that. Alright, so when you see this chart, any chart in front of you, so you have to find out where is the change, which is the what is the change, where is the change, and when is the change. So what does it mean? It means from this triple top here, my dear friend, if you can see from this triple top here, and those of you who are now following our 3 months trader foundation, we have actually written it down in black and white. Top formation is takes a smaller time, and it is very can be extremely volatile, and then the bottom formation takes a longer time, like this fellow, as you can see, it takes a longer time, and then in narrow range can be narrow. So after this bottom formation, after this bottom formation, what happens is, as per our rule of it can break 1, it cannot break 2, this is the start of a uptrend. When we see uptrend, it means what is the definition of a uptrend in first term? Question to you, what is the first term uptrend definition?
Higher up, higher low, and higher high.
Is that first term? First term means immediate. Questions for Molalo, Vinay, and everyone, Sin Song, everyone. First term or immediate uptrend, what is the definition? What Sri said is different. You can type in or talk. Go.
Up bar and down.
That's correct. Sin Song said up bar and down bar. Brilliant. So when we see up not down bar, Sin Song has exactly written it down, up bars. When we see up bar, then there is a first term uptrend. So this is a up bar. This is up bar. This is up bar. This is up bar. The more this is up bar. This is up bar. The more we see up bar, so that is the first term trend. So from here, up bar, outside bar, up bar. So out of 7, 6 of them are up bar. So this is the first term trend. When the first term trend is up, the next one we are looking for a second term trend. What is the definition of a second term trend or intermediate? First term is known as immediate, second term is known as intermediate. So what is this second term, please?
Swing highs.
Swing highs. So when we say swing highs and swing lows, so that is a so this is a up bar in front of you. So who said that, Sri or Sinchang?
Sin.
Swing song. Higher swing song. Great, brilliant. So this is up bar first term trend, and then Shin Song says higher swing highs and higher swing lows. So what is the swing high, swing low? This is a swing high, this is a swing low. So which can be correspond to top peaks and troughs, but we'll concentrate on swing lows and swing highs. Swing low, swing low, swing high. If anyone disagrees with me, I'm doing any mistake, please let me know. So this is swing high, this is a higher swing high, this is another higher swing high, this has higher swing high, then this was a swing high before swing high, and this was the swing high. So swing, when the swing highs goes up and the swing lows goes up, when you do a lot of practice, it will come automatically. You don't have to do this, but for taking it to the automatic level in your subconscious mind, you have to practice maybe thousands of times. Yeah, if you practice it thousands of times, writing it down, then it will be registered in your brain, which comes automatically within fractions of a period. Alright, so this is first term and second term trend. Everyone clear about first term and second term trend? Yes, no?
Yeah.
Very good, excellent. So within this period only, we have seen a base formation. So my dear friend, please for the rest of your trading career, please do not forget this simple terminology: base formation, top formation, double top, double bottom, and swing highs and swing lows, and so on and so forth. Yeah, this is the base formation. After the base formation, only within this period, we have come to know that the swing highs have gone up and the swing lows have gone up. Yes, no?
Yes.
Yep, swing highs has gone up, swing lows. So the and we see how many up bar we saw? 3 of them here. So 3 out of 3 up bars, and 3 higher swing highs, and 3 higher swing lows, and 2 higher swing highs. So in first term, second term, trend is up. So when you establish this with our model of it can break 1, cannot break 2, so you are now sure with certain percentage, because this is a game of probability, that this is going to go up. So when you see that the base formation is clear, and this is the in candlestick, what is this? These 3. Morning star. Brilliant. Who said that? 3. So morning star, and then morning star, and then you take this low of the base formation, and go up to the last bar. Go to the last. When you are here, your chart will look like this. When you are here, your channel will look like this. Automatically it will change to this. Automatically it will change to this only and only if you have dropped the last point here. How do you know that you have done it correctly? You can click on this move icon and go here, and it will show you this is the last point, and this is the first point, as you can see. Okay, but if you by mistake, if you do this to this point, then it will stop there. It will not change automatically. So you have to do it last point to automatically for the software to take action.
So is there any configuration needs to be updated?
Configuration of which one?
Of the channel.
Yeah, that's a good question. Configuration of channels need to be updated to the tune of our understanding of using the universal number golden ratio of 1.618. So we prefer 1.618. So if you type in here 1.618, it will take 1.62 because it rounds it off. So that is our because we love everyone, any mathematics person or anything, universal pattern, DNA structure, bone structure can be explained through golden ratio. So we also take this advantage of this golden ratio to tell us the possible end of a corrective or a impulsive wave. If it is not, matching, if it is not, if the more often than not market participants magically will match this. If it is not matching, you have the liberty to change this to 1, which is useless here. You can change it to 2, which is useless here. Why I say useless? Useless means market participants is not even touching, price is not touching even once these pointers here. So that's why 1.618 is a better number. Not always, but most of the any other question? Sukhdeep says, can you please repeat channel points? Channel points are, the last point should be the last bar. So this should be the last point. Any portion of this last bar, you can place it here, you can place it here, as long as it is the last bar. So this is the last bar. So let it last point. I'll write down last point of the channel. Last point of channel. Not LOC. What is LOC? line of control. Yeah. And then this is first point of channel. First point of channel. So first point of the channel is the possible lowest swing low of the base formation, the last point. And when we see the up bar and the higher high, higher low, so we take the first point as the first point and the last point as the last part. Then click on this, click once, and then click once anywhere, not on the low or not on the close, not on the anywhere. You can close, you can here, you can anywhere, and then you can come here, anywhere. Supposing I am dropping in here or here, it's not changing as long as the vertical line is same. So I am going here, dropping it. So this is the points. Did I answer your question, Sukhdeep?
So I mean, again, I'm bit,
Sukhdeep says yes.
no, I'm bit lost again. So just to replace so first to draw the channel. So first I go to the lowest point.
Yeah. If you are going to an up channel, yeah.
Yeah. First lowest, then go to the
Last bar.
yeah, last one. So, first lowest and the last part.
First lowest and the last bar, yeah.
Okay. So no need to because I was doing a mistake. So I used to go to the lowest point, then I used to go to the high point.
This one here.
Yeah.
That's the mistake.
Okay.
That means what? You are restricting the channel from here to here. That's what you are doing, isn't it?
Yes. So that's what I was.
Yeah. So if you can do that, but the problem is if you do that, your channel will look like this. Your channel will look like this. It will stop and it will not update automatically. Your channel look like this. Dot dot also help you. It is not bad. Nothing is bad or good. It will also help you to short the market if this low is taken out, if this low is taken out, if this low is taken out, because it is not going inside the channel again. It is not going inside the channel again and high taken out. See, high not taken out and not going inside the channel. It will help you. All the channels, all the Fibonacci's will help you in one way or the other, provided you know you interpret the way as I am doing.
Correct. So no, this is perfect channel. The first point in the latest point.
Okay. Any other question?
So I have a list of questions. So
Sukhdeep says, how to set golden ratio? That's simple. You have to right click on the channel. You have to right click and then configure. Either right click configure or click the configure button here. The hammer with a spanner, and then click here on the channel, and then change this to 1.618 and hit enter. Okay. Any other question before I? Sukhdeep says fine, thanks. Alright. Alright, so everyone is good. Then I go to the next question. What was your next question, Sri, if you can speak?
Yeah. When I'm doing the 2-day or 1 day, 12 hour or 4 hour trading, so which higher time frame should you look at? Which is weekly or monthly for a weekly price action analysis?
Can you repeat slowly? First, asset class. Which asset class you are talking about?
It is Forex.
Forex. Any instrument you are talking about? AUD, USD or GBP?
AUD, USD, yeah, we can take.
Okay. We are talking now Forex. So we are saying Australian dollar against United States dollar. Those of you who have done currency coaching with us, Forex coaching with us, go.
So for 2 day,
For 2-day. So I go to 2-day. So 2-day. Let it come. It is sleeping. It is thinking. Who has seen the movie Sakuntala Devi recently? You know who is Sakuntala Devi?
greatest mathematician.
Yeah, one of the greatest mathematicians from India, and her name is in Greenwich world record because she bet many times, most of the times, the top grade computation by record time. So as the movie came in Hindi, those of you can understand Hindi or even see the subtitles. That's a beautiful movie, and it has also portrayed the relationship between mother and daughter. Those of you, today is a Father's Day, so happy Father's Day to all of you, wonderful fathers. All right, 2-day, go.
Okay,
So
sir.
this is our 2-day maximize price.
So for 2-day live trading
Mm.
during the weekend,
Mm.
price action analysis needs to be done for the next week.
Mm-hmm.
So which time frame needs to be considered? Is it weekly and monthly?
If you are trading 2-day, it is only 2-day, because you know from that is our advantage in when we say in three months course, that we give only one uh, uh, time frame, one page to analyze you everything, didn't we?
Correct.
Yeah. So in one, whether it is 2-day or 1 minute or 1 month or weekly or daily or 4 hour, 12 hour, doesn't matter, as long as you are understanding the first term trend as in up bar, down bar, second term trend as in peaks and drops and swing highs and swing lows, and third term trend as in P star, T star. If you remember this, I told you with folded hands, I probably requested you to remember everything what we discussed. And for any analysis of any long term, medium term or short term trend, you see only the time frame in which you are trading. Like if this is a 2-day chart, this is a 2-day chart. If you are trading 4 hour, 4 hour. If you are trading 5 minutes, 5 minutes. So the answer to your question is, for analyzing trend in 2-day, because you are trading 2-day chart, so answer is 2-day.
So in that case, it is not required to refer the higher time frame to understand what is actually happening on the higher time frame. Let's say for the 2-day trading, I no need to refer to weekly and monthly.
For what? You can go back and see monthly. If I see this monthly look like this, what does it tell you?
Uptrend.
What time frame?
Okay, it's monthly uptrend.
No, monthly anyone can see monthly. First term, second term, third term. What is the trend here?
This is the first one.
Correct, because we see up bars 1, 2, 3, 4. 4 out of 6 are up bars. So this is monthly. Monthly is telling you first term uptrend. Correct?
Yeah.
Weekly will tell you something different. What is weekly telling you?
Weekly is telling me swing high, higher swing high.
It is telling you first term trend is up, second term trend is up, third term trend is up.
Yeah.
because P star are broken. This was a P star till this point. Anyone remembers what is a P star? T star? Molalu, Sinsong, Vinay, Selben.
Which is not broken.
Correct. Which is not broken. So this was not broken till this point. So P star, this is this P star not broken here. This P star almost no. So P star is going up, T star is going up, P is going up, T is going up, up bar, more up bar. So this time frame is telling you first term, second term, third term trend is up.
Yeah.
What did the monthly told you?
First term is up.
So is it matching with is weekly is matching with monthly?
Yes.
And then you go to the 2 day, and what 2 day is telling you?
Today is also telling all the three.
Correct, absolutely correct. All the 3 time frames are up bar, PT, P star, T star. Very good. So why do you want to go to you can go to monthly and weekly, but not required, because monthly can do corrective, weekly can do impulsive, and 2 day can do corrective. So then in that case you'll be confused.
Okay, good.
Did I answer your
Clear.
question?
Yeah, that's clear.
Next.
Okay, next question. Could you
All of you please ask your question, type in here. I am just answering Sri what he has already answered, already asked. Sorry, go please.
so next please explain that inside and outside bars.
Please explain inside and outside bars. Yeah.
And how to deal with series of inside and outside bars.
How to deal?
And outside bar can be peak and drop, or it can only be swing high and swing low.
So he is asking me what is inside and outside bar, and first I'll answer one by one. I'll read
You
it
can
there.
go to the, because I think we are on AU.
Yeah. So let's see inside outside bar. So from this module 2 unit 1, we know what is a up bar, down bar. We know what is a peak, what is a drop, and we also know what is a swing high and swing low. Correct? Yes, no?
Yeah.
Yes. So if we know that, then anything which is not falling inside this is a inside outside. Let's see. All right. So tell.
Could you please go to the 2 day starting from 7th of September 2018.
7th of September 2018. Why?
So that's where I was doing the back testing. So
7th of September,
2018 please.
not 19.
No.
Okay. 2018, 7th September. 7th of September, is it?
Yeah.
Yeah, I'm there.
So let's start from here.
Yeah. What do I start? Up bar, down bar?
No. IS and inside bar and outside bar.
This is inside bar. This is outside bar. Understood?
Yeah. I understood.
This is
But
inside bar.
When outside.
What is an inside bar? Inside bar whose whose high is lower than the previous, and whose low is higher than the previous. So this is inside. And what is outside? Whose high is higher than the previous, and whose low is lower than the previous. So this is outside. This is inside.
Can we do the bar by bar analysis starting with the 7th of September please? So let's move to the
I think last time we did it. Alright, what do you want me to do? On what time frame?
same 2 days.
2 day time frame. And we'll do, we identify up bar, down bar, is it? What do you do?
No, we will just focus on when we when we when we come across inside bar, what should be my thought process for taking the trade or doing the trade or exiting the trade.
Oh, simple. For that you don't have to do that much exercise. For that, what you have to do, for inside and outside bar, only thing which can be done is to ignore these as if they are not there. So what you have to do, you have to color them in your mind and make it as dark as possible.
So it means no action should be taken.
It means nothing to be done, as if nothing is there. Just forget this. Just delete these two bar from your chart mentally. You cannot physically do that. You have to mentally do that, and then you see what is happening after that. After that, what is happening? It is an up bar. After that, what is happening is an up bar. After that, what is happening is a down bar.
Down.
After that, what is happening is an outside bar. After that, what is happening? This is inside bar, because this low is 7202. This is 72029, and this is 72021. So this is not inside. This is down bar. So this is down bar. Make sense? So when you see this outside bar, you can just ignore it through
Okay.
this.
So when I see outside bar,
Yeah.
and if there is a signal on the system, so I should ignore the
No,
signal. Is that
no, no, no,
no?
no. Signals in outside bar or inside bar should be considered. Not, I have not told you to ignore signals. No,
Okay. Yeah. So
I told you today not to.
So in this case, there is an outside bar and there is a TP.
In this one, this one,
Now,
this
if you see the histogram.
this is a turning point.
Yeah.
This is a down bar. Down bar turning point is all right.
So basically, this is a. Of course, it's a, this is blue. So this is a hook long. If both
If everything is matching.
this,
But your question is whether for inside outside bar histograms should be neglected? No. Whether the bars can be neglected? Yes.
so it means so when we say histogram, they are our signals, and we need to act on the signal.
Correct.
Provided the scoring is there.
Provided, yeah, the scoring is there, and of course when you do this, we do this in a candlestick format. If you remember candlesticks, the outside bars for at time to time, the outside bars can be actually strong engulfing. Let me see if there is any. Maybe SPTRD. Let's go to SP 500 in Go Market, or SPTRD in IG, the S&P 500. Sukhdeep, you have any question? Yeah, engulfing. Sukhdeep is writing engulfing. Yeah. So last bar. Sorry, not the last one. Can you see this? Whether if I change this to bar, what it will look like? If I change this to bar,
Outside bar.
it will be an outside bar. And if I change this to candle, what it will tell us?
It's a bearish and
So you have to remember, if you are concentrating outside, if you are considering bars at middle, for example at anywhere in this middle, if you are seeing inside outside, you can ignore. But if you see an engulfing, which is a very strong engulfing, because it's an engulf 1 2 3 at 3500, which is a round number, you cannot ignore this outside bar. So everything is with context. Next question. So Sukhdeep says outside bar can be both swing high and swing low. Yes, that's correct. Outside bar can be both swing highs and swing lows.
But it cannot be, the outside bar cannot be counted as a peak or drop.
It cannot be. It cannot be. Why it cannot be? Because of the simple reason. A peak is a down bar followed by an up bar. If this is an outside bar, neither it is a down bar nor a up bar. So how can it be peak? It cannot be peak. That's why peaks are different from swing high, swing lows. Good that you are asking these questions, because these are the heart of trading.
And just let's pick up a stream of bar. We just got the inside bar, then outside bar.
Are you doing a study on inside outside?
No. It's actually
Not good to do. Good to do. If you are doing a
done that when I'm doing the black picture, just conflicting are there. So that's
okay, go.
so let's identify one of the inside bar or the uptrend.
Please write down your questions here. Sri is asking questions. I am appreciating. But Mola, Lisa, Sinshong, Sukhdeep, Selben, and Vikash, everyone, Vinay, everyone should actually write questions. Any questions, good, no question is good or bad. Please type in your question so that any questions you have can be clear. Yeah. Go. Should I do what? Inside outside bar? Can you repeat your question, please? Sorry, I forgot. Huh?
Okay, let's take a uptrend.
This is uptrend.
Yeah.
Hmm.
Okay, and the first just give me a
6.65, 5.4, 9.18, 6.35, 6.47. See how the corrective actions are matching. Lisa says, Partha, in previous monthly reviews we spoke about using candlestick as a signal to enter a trade, for example Harami, Morningstar, etc. Are these candlesticks less meaningful in 4-hour charts because 4-hour is more volatile? Yes. This very good question. Lisa is asking. Sri is forming his question, so I'll take this advantage and then answers Lisa's question. Lisa is telling that in the last section we had talked about how to take candlesticks as a trading opportunity. The candlesticks are extremely helpful if we go for a time frame of weekly, like this is a okay, let me ask you, what is this candlestick, these two? Harami. Lisa says Harami. This is a dark cloud cover. Yeah, dark opposite of piercing. Sukhdeep, piercing we see both of you are very close, Lisa and piercing. Sri is actually correct. Sukhdeep says piercing. Piercing is to be seen in a bullish environment like this one. This was a piercing. This one is a piercing. So this is piercing. This one is a piercing candle. Yeah. Piercing not Parthasarathi, piercing candle. Yeah. And then this is a dark cloud cover. And why is it this is not a Harami, Lisa? Because this has closed below the midpoint. If it is closing below the midpoint, then it is a dark cloud cover. If it is not closing below, above, then it is a Harami. So in this case, it's a dark cloud cover, and this is a piercing. Okay. Lisa says dark cloud cover. So when you see a dark cloud cover in a higher time frame, Lisa, what you have to do, you have to when you have backtested this many times and have seen the success of dark cloud cover and so on and so forth, and also you have to how to do that. But in the meantime, I'll answer Lisa's question. So if you are doing it in a weekly chart, then possibly go ahead and take the trade here on the dark cloud cover when the low taken out, and put the stop loss here, depending on the spread and so on and so forth. So for a weekly chart, that is good. And when you say piercing, and take the trade when this bar closes or high taken out, and they put the stop loss here in a weekly time frame. And then you can ride, and you see this Morningstar, you see this kind of hammer, not a good one, kind of hammer, and touching the low line, touching the low support line. This is support, this is support. Molalo and Sinsong and Vinay I talked about dynamic support. So this is a dynamic support, dynamic support, dynamic support. When it is touching, when candles are touching dynamic supports, then they becomes a bullish candlestick pattern. So this is a bullish candlestick pattern, bullish candlestick. This one candlestick, this is engulfing, and this is a kind of hammer. So you can buy here, you can buy here, and so on. You can buy here. Even then you go to a 2-day chart, and you see this is a what is this? Engulfing. So you buy here, and what is this? Doji, and not a not a morning star, because this morning star, this close has to be above this. Close has to be above this. So you can click on this, considering this is a hammer kind of doji. Go long, go long, go long, and this is the morning star. Go long from here, and so on and so forth. You don't go long here because nothing has happened here. So that is a 2-day chart. If you bring it to 1-day chart.
Sorry, sir. So just now, to come to the 1-day chart, so first we identified a bearish reversal, which was a dark out flower on the weekly. Then we came down to 2-day, and then we are at 2-day. So to identify the opportunity, trade opportunity on the lower side. So is it correct?
No. I just showed you. If you are trading weekly, then you can go long at these points. If you are trading 2-day, then you can go long from those points. If you are trading 1-day, you can go long from those points. What are the points here? The points, you do a channel here from here to here. Then you this is a morning star. You go long here. This is the kind of hammer, not a good one. Go long. This is a very good hammer. Go long, and only take the long positions in an uptrending market. Don't short the market. Yeah. So that is, you can see the whipsaws is increasing on a reduced time frame, in a reduced time frame. Yeah. And then what you have to do, if you go to 4 hourly, if you go to 4 hourly, then 4 hourly, and for example, you are drawing the channel, same channel from here to here. See how this 4 hourly channel is broken. So then in that case, you see this morning star here, you see this hammer here, you see this piercing here. You can take advantage of that. So depending on what, this is a morning star here, this is a morning star here, harami. Depending on what time frame you are trading, and what time frame you are comfortable with, whether it is weekly, monthly, daily, 2-day, it doesn't matter, as long as you are comfortable with 4 hourly. Means what? Every 4 hour religiously you are coming and seeing the chart. So that is the discipline which is required.
So next we'll continue to on my previous question. Can we go back to Aussie dollar?
Just hold on for a minute. Hold on. Lisa, did I answer your question? I'll just wait for Lisa's answer. Lisa, did I answer your questions? Lisa is taking time. Alright. Molal is, I'll come to you, Sri. Molal is asking a question. Do you enter the trade from the low of the bar or the Lisa is saying, so you are saying that in 4 hour candlestick is less meaningful. I'm not saying that. What I'm saying is you can have more whipsaws. You can have more whipsaws or more stopped out conditions if you are using a tight stop. If you are using a tight stop, then you will be have a more whipsaws. Like supposing you entered here and you forgot to close the trade here, then you got stopped out there. So the discipline required in 4 hour is every 4 hour you have to come and see the chart and take decision. For example, if it is a what is this 3, what is this 3 candles telling you? What is this 3 red candles telling you? 3, I'm asking 3. Lisa says Rami. Sukhdeep says engulfing. What are these 3 candles known as?
Three cows, three cows.
Something? What is that something? Three black crows.
Three.
3 black crows, yeah. 3 black crows. Okay, nowadays black color is black color is actually replaced by red, and then we but still the name stays there. Name says 3 black crows. Okay. And yeah, so to answer Lisa's question, if you are not closing the trade on these 3 black crows and you are hanging on, then possibly you will have a losing trade instead of winning a humongous winning trade. So that is the discipline required in 4 hour, number 1. And number 2, that again will depend on the back testing. If you have done, those of you who have done this back testing on candlesticks on this module 3 unit 1 on candlesticks, module 3 unit 1 on candlesticks, Molalo and Selvan says to Lisa, I am in the opinion that candlesticks work in most all of them, yeah, all of the time frame, but discipline is required. Yeah, this that's correct, Selvan. Thank you, Selvan. Lisa says good to know. And so if you when you remember this candlestick module 3 unit 1, and if you have done the practice task as we have asked from as we have requested you to do the practice task, and like this practice task, and when you have done the practice task in this format, for example, candlestick hammer, bullish engulfing, morning star piercing, bullish harami, inverted hammer, bearish engulfing, evening star, dark cloud cow, bearish harami, and the currency pairs, for example, if you are trading forex, otherwise Apple, Amazon, and so on and so forth, or live cattle, rough rice, gold, silver, gold, oil. If you are doing this in a daily time frame, or weekly time frame, and overall time frame. So if you are doing these 3, then if you have done a overall probability, and you have done for example 393 total, 567 of them, 567 candles you have seen in your back testing, and seen the success of morning star here is 75%, which is good. And here a bearish engulfing, not bearish, evening star is 75%. If you have done, when you complete this type of back testing, when we request you to do back testing, we expect you to do this type of back testing. So that this is from one of your friend, a student who did this, and he's doing he's big on candlesticks, so he has done this. Why he is possibly trading candlesticks patterns? Because he has done this. He has seen 567, not only seen but also written down the success of each candlestick pattern against each currency, because he was a forex trader. So if you have done this, then you can do candlestick in 4 hour daily. But to answer your question, yes, 4 hour can be traded candlesticks, even 1 minute can be traded, but the whipsaws or the more opportunities will come in 4 hour, as well as the more cost of business possibly can come in 4 hours, unless and until you are very disciplined. And Molal is asking, do you enter the trade from the low of the bar or the low of the body. Mola law, I know why you are asking these questions. When we complete this module 3 unit 1, we'll answer that question. But to answer the question in a short term, in a just like that, I'll say we should enter the candlesticks with a close, not from the high. We should enter the close. We should enter the close, at the close. So to answer your question, at the close. Lisa is showing 4 hour. You discussed that. And Selvan, yes. Is it Sukhdeep saying? Sukhdeep is saying it is looking like S&P 500 is trying to enter back into the channel. So let's see that. And what time frame? Sukhdeep. And Selvan is saying always trade what you see, never what you think. Absolutely correct. This is brilliant. What you always trade what you see, never what you think. Yeah, so never, and no, what you see will be a repetition of what you have seen in the past. If you have seen in the past 567 candlestick with a profit percentage of 75-74 for evening star and bearish engulfing, so it is easy to take a bearish engulfing, it is easy to take a bullish engulfing and a morning star compared to this percentage of hammer. Success rate is 40. What is the success rate? It hits the price objective. What is the price objective? It is dealt in module 3 unit 1. Yep. All right. So next question is Selbens always trade in for what you see. That's correct. So Deep is asking, is it looking SP 500 trying to enter back into the channel 4-hour time frame? So let's go to the 4-hour time frame and let's see what Sukhdeep is saying. So is it entering? Has it entered or is it trying? What it is? Okay, let's start. Let's get answer from you. What is this? What is these two? What is this? What is this? What is this candle or bar? What is this candle?
Here is Marubazu.
Where is Marubazu? What else?
Okay, all sellers out.
Possible all sellers out, isn't it? Thank you, Sri. All sellers out because 4-hour channel has been broken. So 4-hour channel has been broken, Selben says, and Sri says all sellers out, and what did you say? Marubazu, bearish Maru, which is correct. See, this channel break is an interesting thing because channel break will happen many of the time it will happen, and it will like Sukhdeep is saying, it is trying to go up. Like this fellow has broke the channel again and went up. This fellow crack and snap back. That's it. So this fellow broke the channel, crack and snap back. This fellow broke the channel and crack and snap back. So breaking the channel is not a big problem, but it will be a big problem if it is a big bar. This is a crack and break the channel and crack and snap back. So only breaking the channel is possibly not a best of the best indicator. Like this was the broken channel went up. But when you see three black crows and the price is coming like crazy, and then it stopped here, then thinking this as an all sellers out can be risky. Can be risky because you see the body and the strength of these two candles is extremely strong. So what happens? So all said and done, next possibility is crack and snap back. Yeah, let's see what is crack and snap back. So what is these two candles telling you?
Indecision and morning star, potential
Possible morning star, isn't it? Indecision and possible selling pressure. Sukhdeep says, Sri says possible morning star. Okay, let's see. Everyone agree? And then what is this?
is the inside bar and oversold indecision.
Sukhdeep says hammer, and Sri is saying hammer. Is it a hammer?
No, it is not a.
It's not a hammer. Hammer top wicks cannot be there, and the bottom shadow lower shadow has to be twice the size of the body.
A little
Inside bar is correct. This is engulfing. Yeah, engulfing. The body has engulfed this. Yeah, body has engulfed this. And remember, this is not happening at a support. Yeah, this is not happening at a support, because if we see this swing low and go back to this one, this is below the support, isn't it? Go back to this below and draw. See, this is happening below the support. This is happening below the 61.8, below the 61.8 happening. Yeah, but any which way, this is an engulfing, and this high to be taken out, preferably here, close above the channel. Let's see what happens. What is this? Doji and inside bar. So
inside bar. Yeah.
very good. So you see couple of inside bar, back to back inside bars. Don't get confused between bars and candlestick. If I change these two, it will look like inside bar, isn't it? It will look like this, inside bar. What is this? Hmm?
It's outside bar. It's outside bar.
It's an outside bar. And what is the low of this one? 3338, 3438, 9738, 9738, 97379. It's an up bar or outside bar. 37 and 38, outside bar. This is outside bar. So this is outside bar. What else? This is a possible. If we combine these three, this 5, then that will be a possible morning star. Yeah, if we combine these three, it will have a small body but big shadow, and this will be a, this is not any, but because it has not closed above the midpoint, yeah. If you are intelligent and if you are getting confused what is the 50% of this, easy way to do that is just draw the Fibonacci on that bar and see the 50%. So what you have to do, you have to draw this Fibonacci on that same bar from low, top, bottom, and see the 50% here at 3477, isn't it? But it should be body to body, not from body to. So it has it closed above 50%?
No.
No. Next bar. What is this bar or candle? What is this?
Down bar.
This is a down bar.
A down bar.
Yeah, absolutely, down bar.
Bearish continuation.
And bearish continuation. Can you see that these three bullish bar did not close above this bearish high? So that is one of our principles, isn't it? And then what is this bar or candle?
Oh, it's the inside bar.
This is the inside bar.
Inside
From
bar.
bar to bar, and from candle, what is this? This is a possible piercing. So everything, yeah, possible. So everything happening except it is going to go here. So to answer Sukhdeep's question, whether it is trying, we don't know whether it is, I don't know the meaning of whether it is trying or not, but I can see, as Selvan said, you need to see what is happening. Don't get confused with trying and thinking. So it is not closing here above. So this is a bearish pressure as of now. And Lisa says, Partha, I understand your analysis here, but I am a bit confused. I thought you said that ASO and ABO should not be used for diagonal support. That's correct. That it should be of horizontal support or resistance. That's correct. That's correct. When we are starting and we are confused with diagonal support and resistance with horizontal support and resistance, this is a diagonal channel, is a diagonal support resistance. When we are starting our study, then possibly we should avoid seeing this all sellers out at a diagonal. But I said to yes to Sri, my mind was probably reading the horizontal support here at 88.6. Lisa, Sorry for that. Yeah, what you said is correct, but my mind in the background was looking at 88.6 support, horizontal. So that is my how my mind work most of the time. Yeah, so I was saying that. Yeah, so preferably you should offer a diagonal, sorry, you should offer a horizontal analysis in place of a diagonal one when you are seeing all sellers out, all buyers out. So, but in both cases this is a possible, all sellers out. Lisa says okay, and then Sri says difference between SPTRD and DX for forex trading, is it necessary to Watcham calcit? Watcham calcit means what? What is this Watcham calcit? Means what? Watchama call it. Sri, what is the Watchama call it?
Sorry, sir, I think it was earlier.
It's a symbol. Are you abusing us in different language?
What can no, I'm sorry. That's earlier I tried one question. So basically, what I would like to understand is the difference between the S&P 500 and the dollar index,
Hmm.
and is it necessary for forex trading to monitor S&P 500 to understand what's happening there, and is there any effect?
So what does it mean? Watchama call it? What does it mean?
No, just please ignore.
Ignore. Unbelievable, my goodness. Alright, so question is, what is difference between SPTRD and DX? The difference is very simple. SPTRD means US 500 cash. In Go market it is SP 500. That is an indication of 500 United States big companies which are listed in NYSE. So that's a stock market index, and that is a stock and anything to do with shares or stocks. And then DX is dollar index.
Dollar index.
So that is an in basket of 6 currency pairs. So euro, sterling, and then Canadian dollar, Japanese yen, then Swiss franc and Swedish krona. So those are the 6 currency pairs which are there in this dollar index. They are different because they belong to different asset classes. So if you are trading forex, you better to know what the dollar index is doing because with the weakness of the dollar index, all the other asset class, all the other forex, which are all of them are traded against dollar. So if the dollar index is having weakness, impulsive weakness like this, so all the other instruments, for example euro, sterling, will absolutely go crazy to the upside here. So that is the relationship between dollar index and forex. There is not much relationship between dollar index and forex, dollar index and SPX 500, because if go ahead. Sri says when SPTRD trading high, currency pairs are negatively correlated. I don't know. We have to see, because when the bond market returns are high, then possibly money will flow out of the stock market to the bond market. But if not, then not. So let's see the monthly of dollar index. So dollar index is getting a support here any which way. So this is dollar index, and then if we compare this with SPX, so right click and compare and write down SPTRD. This is a code for SP 500. So they cannot actually compare because of the brand. So let's see this, make this as blue. So S&P is blue, and this fellow, let's do it in red. So dollar index is in red. So I don't know what comparison you are seeing, but I don't see much of it. So this is the relation.
In one of the slides I gone through, when the stock market is high, there is a probability that Forex is performing clearly.
You have to see this in a chart, as Selvan said. Trade what you see. If you see correlation between these two, trade. Otherwise not. So I would not see these two charts to compare. I don't know if we change the relative scale to logarithmic. Not much of difference, isn't it? Not much of difference. So I don't think this helps.
Also a suggestion.
Yeah.
Just put the two charts on. Don't put
Yeah.
the line,
Okay.
put the two charts on.
Yeah, that's a better. That's a better way to do it. Thank you, Selvan, for that. What Selvan is saying, don't compare, just put the two charts on. So let's do that. That's a better way. So we do this. Thank you, Selvan, for that. We do this for dollar index, and this is dollar index, and we resize this and put it here from 2012, and let's duplicate this chart. This is the way you can duplicate. So duplicate this chart and make it. This is a much better way. Thank you, Selvan. I was struggling there. So US 500, and make it unlink. Make it unlink. Otherwise, they'll be all. So unlink them. So this is S&P 500 in front of you, and this is dollar index from. This is from 2009 after the recovery. This is from 2009. So what you can do, you can draw your own analysis. I don't think much. What do you think? What are your thought process here? And dollar is on the,
No correlation between the two.
isn't it? Or at least they are going not
Both in
much.
same direction.
Not always. You have to be very precise when you comment that. When you comment that, you have to be very precise and draw vertical lines. So for example, this is for example, we are comparing. Let's see, dollar index has coming down from here to here. Yes or no? From here to there, and again coming down from here to here. Okay, let's do these two. So this is not after COVID. Everywhere it cannot be after COVID. What have you done? Unbelievable. This is because of your what Chamal climate. Okay. Alright, so January 2017 it came down, and again it came down from March. Let's do the same thing on January 2017. So January 2017, it when dollar index came down, it went up till this point, which is February 2018. February 2018. So this fellow came down. This fellow came down. This fellow means dollar index came down, and within the same time frame, this fellow went up.
That's correct.
Correct? And then what happened? This fellow again came down from here. Correct? September 2020, sorry, March 2022 till date.
Yeah.
But this fellow went up. Correct? So that may be some correlation, but I don't know. Yeah. And but in between, the problem is in between, this fellow went up, yeah, in between from February to March it went up. This fellow from February 2018 first came down and then went up and again came down. So it only went up, but it did whipsaws 3 times. So I would not compare them. So what I can only say that, did I answer your question? Sorry.
No, no. When on the WhatsApp chat, one day you texted S&P 500 is down or something like that. So what does it mean? What, that's what I'm trying to understand.
My request would be to question that when when the WhatsApp, because when was, if I forget the context, then possibly not making sense.
Okay.
Yeah, difficult.
I'll work on it.
Yeah. Please tell me the date. Yeah. Otherwise, I think we are done with the time. And any last question? Otherwise, we'll thank everyone, each one of you.
I think referring to your last post on WhatsApp,
Is
where
it?
you say that the head and shoulders
Okay. What was the date?
4-hour time frame.
4 hour time.
The,
Okay. Okay, let's see that 4 hour time.
S&P 500 is forming head and shoulders in the 4-hour time frame.
Okay. And what was the date?
You sent that on 2nd September.
2nd September. Very good. Yeah, around this time. Yeah. So let's see. Yes. So let's draw the head and shoulder, which I posted here. This is the head, and this is the right hand shoulder. This is the head, this is the left hand shoulder, and this is the neckline. Everyone agree?
Yeah.
Sri?
Yes, correct.
Correct.
Yes.
So is this a top reversal or a bottom reversal, head and shoulder?
Okay.
Top reversal. And what should happen for this to be successful?
Neckline should be broken.
And what is the definition of break?
Close above, close below, low take.
Okay. So it should close below this neckline and then low taken out. Correct?
Correct.
So far so good, everyone? Any question? Too much, isn't it? Make it this 3. Yeah. Alright. So next, so we are expecting if price is going to go down, then it has to close below and low taken out up to this point, isn't it?
Yeah.
Let's see what happened. Did it close below?
No.
What did it do?
It broke the head to
Right hand. So what does it mean? If it breaks the head to the right hand shoulder, that means what? Failed.
Not other than
Failure of the head and shoulder. So what you need to do? You need to take the dustbin and delete this.
No, sir.
What?
When you are doing this analysis,
Hmm.
when you are monitoring this US 500 cash,
Hmm.
so is it?
I was here when I posted that.
So
Hmm.
it means watch out on the stock market, or is it?
No, I was trading. I was trading S&P 500. I was trading S&P 500 as per our bonds and indices, like this one, bonds and indices. Those of you who has done bonds and indices will understand that.
So you was trading S&P 500.
And saw this and posted.
That doesn't mean that the stock market there are some opportunities or possible.
Uh,
It's an indication of that.
Indication of what?
Potential bearish opportunities in the stock.
In the S&P 500.
Yeah.
Yes, correct. If the neckline is broken and low low taken out.
Only for the S&P 500.
Correct. If S&P falling down, then the stock market will follow, because that is an index, like dollar index I told you. All right. Any other question from anyone else? Otherwise, I'll thanks.
I have one more question, Mr. Raj.
What is that?
So when price is
Can you come
retracing,
close to the mic?
yeah, when price is retracing or pulling back
Hmm.
on any instrument,
Hmm.
what is a good mistake? I'll read this question. When price is retracing or pulling back from resistance or support,
Hmm.
what is the best way to understand how much the price can retrace?
I think the best way to measure the previous retracements
Yeah,
and see like this one 6.47, 6.35, 5.45 and 6.65. Measure the previous retracement. You will understand what is the current retracement. And they should be similar, not exact but similar. Like this 6, 6, 6, 9 is the odd man out and 6. So all these 4 are correct retracements for this instrument in front of us.
so do you draw, do you draw the Fibonacci
Not Fibonacci, scale,
scale?
this scale. Just measure from the swing high to the swing low, from the impulsive high to the corrective low.
I mean, just measure the previous one.
Previous, yeah, unless and until you measure the previous one, how do you know? So this is, you have to see the impulsive and corrective, impulsive and corrective, impulsive, corrective, right? Then you have to measure the impulsive top to the corrective bottom, impulsive top to the corrective bottom, impulsive top to the corrective bottom. Any other question from anyone else? Did I answer your question, Sri?
Yeah, that's good.
Alright, so no one is asking any question, everyone is tired. Me too. Thank you so very much for all of your wonderful questions and beautiful explanations from all of you, and really enjoyed the session, and I hope we have added some value, and take care and bye for now. Isha says thank you, bye for now. Moolala says thank you, 3 years. Sri says thank you very much. Kanya Singh Song says thank you. Thanks a ton. Bye for now. পড়াশোনা ছেড়ে দেবে?
আমি পড়াতাম বসছিল
মন